All right, everyone. So welcome to the first trade recap over at StatsEdge Pro. If you're seeing this on YouTube, because I'm going to upload this one and a couple of the first ones to YouTube, just know this is an addition that I'm doing to the service by popular demand, in which not only do you have access to my watch list and a live trading room, my research every single night on the markets, that kind of thing, but also an after the fact of this is how I did individual trades. This is something that people wanted to have the ability to learn, to make sure that they were, having some sort of a plan on when to enter and when to exit certain trades. So this one we took VERX. We actually watched this one for a long period of time before it finally broke. So first of all, this is from my play, which is just a earnings gap, right? So right here, this candle right here was actually an earnings play. And then you can just see we consolidated sideways for a long period of time. And this is what I want to see. This shows me that there's some sort of fundamental change that occurred because of earnings. I don't need to know what that is, which is great as a technician and someone who's not really that interested. I can simply just look at it and say, okay, well, they gapped it up and they've been unable to close the gap the entire time. So whatever happened on earnings here was strong. So, this is what it would have looked like minus this note right here when it was on the list. I take a screenshot and a little video every single night of everything that I'm watching and why. And when we when we broke it and then we closed is the important thing. We closed right here. That was my signal to enter. I do all of my swing trading on the close just because I see a lot of wicks one way or the other. Again, I want a clean close over this point right here. So, I always put a worst case stop around, 17. I just make them whole numbers, but I usually do a worst case stop. And in this case, that worst case stop was, probably below worst case this candle right here, but, in this area. But the way I look at it is, because I look at everything on the close, for me, I'm not really going to let it go below this candle right here, which was the last pullback. So I'm not really risking that much on a closing basis. But again, I always have a worst case stop out in case something crazy happens. I'll take that hit. So later, the next day, if we go into the next candle, so this candle right here, we had a great continuation from there. I'm already up kind of 1.5-ish for what I would risk on a closing basis anyway. So in this market, and this is where you'll see me adapt my trading, it's not so much in the entries, but in the management. So in this market, where everything's a little bit choppy and everything's a little bit of a nightmare, I took out half the position right there at 1.5, moved my stop up below the low of the entry candle. So, barring some sort of bad news or a crazy gap down or something, this was a profitable trade. I took some money, in my pocket and kind of moved on with my day. And what will happen is you'll notice if we ever get into a nice uptrending or bull market, that will be the thing that will change, where I will stop taking partials so quickly. Maybe I'll look for more of a move. Maybe I'll hold the whole thing for a trailing stop, that kind of thing. But when you're in a choppy market like this, my goal is to take these partial profits to help, smooth equity returns, to help, put a little bit of money in my pocket. And then hopefully on the rest of them, get a nice little push. And then the idea is eventually, again, when we're in a bull market, that's when you can kind of swing for the fences and go for, real outsized equity growth. So that was great already. 1.5 times my risk, or 1.5 R off the table. And then now I just need to watch it on a closing basis. So when I notice, basically my go-to is usually just an 8 EMA, and I'm just looking for a close below that level. And, you can see that, I don't know if that technically works. I just kind of eyeball it, but I didn't get out on this candle. We ran up quite a bit longer, and then this candle right here, we closed below that 8 EMA. So I put a stop under that day low, and we got kind of triggered out right on the open right here. So allowed me to stay in the move. I get a little bit more out of the trade, right? Not a whole lot more, but a little bit more out of the trade by trailing. But the idea is I want to give some sort of freedom for a continued move because there are some cases where you just get that and the thing just goes and goes and goes and goes. So that's the way I manage this one. Again, I'm going to try to do these once a week at least for Stats Edge Trading Pro. So if you're interested in that, link is in the description below there. The idea, again, is not to tell people what to do, but to show them how I do it, and maybe they can have some ideas. Now, what are some other ways, right? So say you're not interested in the moving average stop out. Well, this one you could kind of do a say a trailing just by looking at and say, okay, every time we pull back here, maybe on a shorter term basis, so we had a couple bar pullback here, maybe your stop goes down there. We had a bit of a sideways push here, so maybe your stop moves up here. You can start to use it on lower time frames. You can actually just use, if you do a volatility, I think, anchored stop, you could do that kind of thing. Let's make that a little bit, I think that's probably 3. So yeah, make that 1.5 or 2 ATRs. And basically what this is doing is just trailing based off of this ATR, right? So there's your entry, and then you trail off an ATR stop. You can do that. A percentage trailing stop is okay. I like ATR and things like that, and moving average is just a little better because they adapt a little bit better to the movement of the stop. Another thing people do is they'll use some sort of indicator. So maybe 2 moving averages and they wait for 1 moving average across the other. I bet you in most cases, it probably would have gotten you out somewhere in this area, right? Whether you used a support trailing stop and you saw, okay, there's a couple candles that put in a support zone in here, whether you used a moving average trailing stop or whether you used, ATR or whatever, probably get you out in the same place. But so just to summarize, enter here. Again, the play is just looking for basing after a strong move after earnings, showing some fundamental shift, right? We get a breakout there. We always put a worst case trailing stop in or a stop in. But again, on a closing basis, if we close kind of back in this area the next day, I'd probably just get right out. I'd rather take 2 or 3 times to get in than to get in and then take a big hit. That's just how I operate. And then pretty instantly, 1.5 times our risk, and then you can just trail kind of right in this area. So I will talk to you guys later.